Hi guys, 𝗲𝗚 with you here again. I'm going to talk to you a little bit about why most property investors never go past 3 investment properties. Rule number 1 is wrong location. Wrong location is mainly because you've listened to your uncle at a barbecue. He's told you to buy a property that did well for him 20 years ago, and so you've decided to buy there. You don't look past beyond your own backyard. You buy a property that you feel like you have to be able to want to live in yourself, and you just get it wrong. That's probably the number 1 reason why most investors that I've seen get it wrong, and probably why I see a lot of people come to me later down the line because they don't want to get this wrong. Second, negative gearing. Now, despite what your accountant told you, negative gearing is not a strategy. It's just a byproduct of if you lose money, the government allows you to claim a little bit of it back, right? But that's not a strategy. What that does is it kills your borrowing capacity. It reduces how much you can buy for your second and your third property, which is not what you want to do, okay? Now, number 2, negative gearing. Number 3, borrowing capacity. This is the most important thing as a property investor that I have learned. I've been investing now for the last 11 years. I'm up to 45 properties in my portfolio. And the most important thing that I've learned to protect is going to be the borrowing capacity. Now, how do you protect borrowing capacity? There's so many different structures or trusts or company structures, different things that you've probably heard about or learnt about. What you need to find out is that if that strategy is actually right for you. But borrowing capacity is the most important thing that you must protect. You know, it's something that you don't think of right now when you're buying your first or your second property, but when you want to go on to your fourth or your fifth, borrowing capacity is the number 1 thing that you're actually trying to protect. It's actually more likely to be more important to you when you build a larger portfolio than the property itself. And the reason I say that is because when you've got a large portfolio, you always kind of get growth in different areas, right, with different cycles. But ultimately, if you can't get that borrowing capacity and you can't borrow the money from the bank, well, that equity is actually useless. So 3 main reasons why you will fail as a property investor if you get these 3 things wrong. Thank you guys. As always, 𝗲𝗚 from 𝗲𝗲 𝗬𝗍𝘀. Any questions, leave a comment and I'll get back to you.